Hi again, it's Brenton Hunt and I'm back with the third instalment of our series on car finance. If you haven't seen the other videos, you'll find links to the useful information on the bottom of this page. In this video, I'm going to pull back the curtain even further and give you some of the clearest information around for getting your next car loan pre-approved and settled. I want to explain the whole process from getting a car loan from start to finish, so that you understand what's required and what you can do to help process the loan smoothly. I also thought I'd go through a few of the common everyday questions that we get concerning car finance. By the end of this video, I hope to have given you a better understanding of some of the workings of car finance and your next car loan. Now, I know that if you're watching this video, there's a high chance you've already fallen in love with a vehicle and are now looking to finance it. But if we could just put that romance on hold for a couple of minutes. I really want you to concentrate on the loan side of things and not the new love of your life. Remember the saying, buy in haste, lament at leisure? You'll have plenty of time for driving your car once you've gotten a great new loan. Okay, got it? The start of any lending process is to see what you actually qualify for. Yes, there are advertisements everywhere that offer what appears to be low rates, but the reality is the only interest rate that matters to you is the one that you qualify for. The interest rate that you qualify for is usually based on a combination of your credit record, the amount of money you're borrowing, your employment history, the vehicle you're looking to buy, and if the car's used for business use or just personal use. Understandably, lending institutions will lower interest rates to scenarios which have a lower risk associated with them. Approximately 85% of our clients qualify for these lower rates. It's not difficult to see that there would be a difference in the risk profile of somebody who has a clear credit history, looking for an average loan amount, who's in a secure job and is looking to buy an average car, compared to somebody who has 20 entries on their credit file, who is looking to borrow a large amount of money for an expensive performance car, and they're still on a probationary period in their new job. The difference in the two risk profiles is obvious, and this is exactly what the lenders are looking at. But I'm not saying that just because you don't meet the criteria of one lender doesn't mean that you can't get a loan approved at all. No, all lenders have different products, which all have their own lending criteria. The loan that you can be approved for is as individual as your own personal circumstances. That's why I say the rate you qualify for is as personal as you are. In order to get qualified, we need to provide documentation to the lender so they can see and assess your story. We do this by submitting your two most recent payslips, a copy of your driver's license, authorization to access your credit record, and provide the details of the vehicle you're looking to purchase. The lender will then manually verify all the information you provide and then usually issue a pre-approval for you to purchase the sort of vehicle you're looking for. This pre-approval process is quick and it takes 2 to 4 hours. In some cases, the lender may ask questions or seek more information concerning the application, but this is only about getting you the lowest possible rate. Once you're approved, you're a cash buyer and can go and negotiate your hardest, knowing your finance is all ready to go. One of the advantages of working with a finance broker and getting pre-approval is that they're a one-stop shop and give you access to a wide range of lenders, so you don't need to go to each one individually. It's worth noting that multiple applications can raise the wrong sort of flag on your credit history, but we'll talk about this later on in this video. Anyway, now it's time to go and find your next car. Purchasing a car is made easier these days by the internet. You can easily search for the vehicle that you're looking for in your state or all over the country. This gives you a reasonably accurate idea of what you can expect to pay. The range in price of a particular car usually reflects the age and the kilometres travelled, but it also reflects how motivated the seller is. I always advocate to negotiate as hard as you can when discussing the price of the car. Always start low and use examples of other comparable vehicles on the market. You'll find that some people will not budge on their price, whereas others who are really looking to sell a car will drop their price to get it moved. Don't forget, let the person that you're negotiating with know that you're a cash buyer and ready to proceed immediately with the sale if they agree to accept your price. Obviously, there are two sorts of sellers, the car dealer and private sales. One negotiates car prices for a living and the other only does it every now and then.
So the car salesman is obviously going to be more seasoned opponent when discussing price. Some salesmen will show you an original price and then a discounted price that is, say, $2,000 cheaper. This can be a trick designed to make you think you're getting a $2,000 discount, and there is no room for further discounts. But I encourage you to ask the uncomfortable question and offer them $1,000 or more less than the asking price on a take it or leave it basis. If the car salesman is having a slow month, he may sell you the car at a reduced profit just to keep his stock moving. But you won't know until you ask. It's okay to tell him you love the car, but not at his price.
You'll probably find private sellers are more motivated. I've heard many stories of private sellers reducing their price by thousands because they're more motivated to get their car sold. Whether you're buying from a car yard or privately, some people like to get a pre-purchase inspection report on the vehicle to confirm its mechanical condition. This comes down to individual choice. Once you've reached an agreement on price with the dealer, the next thing is to get the necessary documents together so that the loan can settle.
For purchases from a car yard, all it takes is a tax invoice from the dealer with all the normal vehicle identification numbers included. They do this every day, so this will happen very quickly. Based on this tax invoice, loan documents will be produced and are ready for signing within hours. If the loan documents are signed and returned by mid-morning, the dealer will have physical funds in his account in the afternoon and you can pick up your vehicle. At worst, you'll be able to pick up the vehicle the following morning. Remember that the car dealer will usually need to arrange a vehicle inspection certificate that needs to be lodged with the transfer of registration. So by the time the car has been inspected and returned, the dealer might already have the funds in his account. When purchasing privately, a little more documentation is required, but this only adds to your security. These include a copy of the vehicle inspection certificate and a payout letter if the seller has the vehicle under finance, a copy of the seller's driver's license, some photos of the vehicle, and details of the seller's bank account where the funds are to be deposited. The seller will also need to sign an invoice that's created with the loan documents evidencing the sale of the vehicle to you. Again, if all these documents are submitted in the morning, the funds will be transferred and available to the seller the same afternoon. The reality is it usually takes longer to receive the documents than it does for the lender to get the money into the seller's account.
So, as you can see, getting a car loan to settle is a fairly straightforward process. There's no real difference in the process if you happen to find the car before you get pre-approval. The process is sped up, and instead of just getting an approval letter issued, loan documents can also be printed for signing straight away. I get numerous questions about car finance, and you might be interested in the following.
So what sort of vehicles can be financed? Car lenders finance different vehicles according to their loan profile. Some will only lend to vehicles that are up to 6 or 7 years old, others will look at older vehicles. Some won't look at greatly modified vehicles, others will. Most won't touch a car that's on the repairable write-off register, and it'll be hard to find insurance anyway, if at all. It pays to get an understanding of the type of vehicle that can be financed before going out and falling in love with one that the lenders won't touch. How can I qualify for a lower rate? I described the factors that will influence interest rates earlier. Therefore, the way to reduce your interest rate is to consider these factors. Probably the least understood would be the condition of your credit file. Every time you apply for credit, that application is recorded by the various credit recording agencies. Also, if you don't pay something like a telephone bill, then this will also be recorded on your credit history, and it will remain there for up to 5 years, even after the bill's been paid.
As a rule of thumb, if you make more than 5 or 6 credit applications in a year, lenders are going to also score you badly for this. The tip here is to avoid hurting your credit history by making too many applications. Going through a finance broker will help you find the best deal without getting a lot of applications on your credit file.
How can I improve my credit file? The best thing to do is get a copy of your credit file. This can be done for free by going to www.vida.com.au. Once you get a copy of the credit file, you will see if there are any defaults or judgments on it. If there are, do whatever is necessary to have them paid and, if possible, removed. By actively attending to these sorts of entries, you're more likely to qualify for a cheaper loan rate. Further information concerning fixing credit files is available from our office. Are there any application or ongoing fees? Most lenders will charge an application fee, and some have small monthly account fees. These should be disclosed up front and are included in any monthly payment rate. Is the interest rate fixed or variable? Usually the interest rates for secured vehicle loans are fixed. Having a fixed interest rate secures you against any increases in your monthly payment. How long does approval last for? When you're approved, you usually have between 2 and 3 months to proceed with purchase of a vehicle. After this time, you'd need to make another application. Can I make extra repayments or lump sum repayments? While this is a good idea in mortgage lending, there's usually no benefit in doing so in car finance. Relatively speaking, the loan amounts and terms are generally small for the lending industry. Therefore, the funders tend to lock in their payment once the loan starts. Are there any penalties for paying off the loan early? For a consumer loan, there can be a small charge to break a vehicle loan. This is more of an administration fee and it covers the cost of removing the funder's encumbrance on the Personal Property Securities Register. If the loan is a commercial loan, there can be some quite onerous repayment penalties where the funder recovers as much of the interest as they can, even though you're paying out the loan early. This is known in the industry as the Rule of 70 and can be quite expensive. How can I check how much I have owing? To find out how much you have owing on your car loan, it's as simple as ringing the funder's customer service centre and they'll tell you exactly what you owe and will provide you with a letter telling you your payout amount at any time. What happens to my loan contract if there's a problem with my car? It's really important to understand that when you buy a car and finance it, you're entering into two separate transactions. One is for the purchase of the car and the other is to finance it. What happens in one contract is completely separate to what happens in the other. If you have a problem with the car, then it does not change your obligations under the loan contract. Be aware also that there is no cooling off period for a car loan contract. My aim in this video has been to provide you with as much information on car loans as I can. I hope that you can use this information to save money, as it gives me a real shot in the arm when I help my clients. In the next video, I'm going to give you an insight as to why you should get your next car loan through mycarloan.net.au. I'm going to go through a number of loan scenarios of some of our clients so you can see some real-world examples. These are the actual stories of loans where our clients made some real savings. If you found this information valuable, please place feedback in the section below. We'd love to read your feedback, questions and comments. I'll see you in the next video.